let's take a look at some information and charts on Polkadot for Brave New Coin. And the Polkadot journey probably starts with Ethereum. If we pop on over to the Wikipedia for Ethereum and we look at the co-founders, get an interesting list of individuals. Vitalik Buterin, who's still with Ethereum, obviously. Anthony DeLorio, Charles Hoskinson, who's moved on to ADA. Two other individuals who I'm unfamiliar with. Joseph Lubin, who's now focused on enterprise Ethereum-related stuff. Gavin Wood, one of the founders or co-founders of Polkadot. And Jeffrey Wilke, who has pieced out, has sold all of his Ethereum December 26, 2019. Pretty poorly timed sell on that amount of ETH, and you can do the math on what that would be worth today. But according to Rick Burton, Jeffrey wrote an early client, quit the project, and then moved on to other stuff. So the question here is how many of these developers have Dan Larimer syndrome, where they're continually moving on to other things. That's my initial qualms with these projects with serial developers, where they've sort of given up on the initial state of things and moved on. Not that that's Gavin Wood here, but it's always interesting. Parity Technologies also Gavin Wood adjacent or headed by Gavin Wood at one point in time, has had issues with their multi-sig wallet, including their ICO raise, which is still stuck in ETH on chain, and they've attempted to get that back in one way or another through sort of coercive voting. And that story is also interesting. But as of now, it remains stuck on the chain and would require some sort of rollback to unlock those hacked funds. So that brings us back to Polkadot, which has all of the important buzzwords, of course, on their homepage, immediately viewable here. Governance, innovation, scalability, interoperability, forkless and future-proof, security for everyone. If I sound like I'm a skeptic, I am. Of course, they have staking and bonding, because why not? And there's been a lot of these networks released semi-recently. Polkadot, one of the bigger ones, Solana. All of these are sort of EOS clones, pre-ETH proof-of-stake clones, all trying to take a slice of the pie. More of a multi-chain approach than what ETH initially was, which is more of a smart contract approach. It's probably too early to even think where stuff like Polkadot could go. I mean, they've started to release parachains, which to me are ICOs of another name. And I think at one point KSM was worth more than Polkadot in market cap. That may still be the case. Kind of bizarre, but okay. So this is currently where they're at in the roadmap. And ultimately, I just think it's too early to look at any of this stuff super seriously. You can always play around with it. But as far as a long-term investment, either you're avoiding it and ignoring it, or you're all in becoming a developer on Polkadot or KSM or one of the parachains. They have some weird hybrid consensus called Grandpa Babe. I'll let you, the viewer, read about this further, but it is a take on one of Ethereum's proof-of-stake pathways that may or may not be included in the final version of ETH. And I always like to look at the blogs of these new chains, and it looks like, most of it is generally PR related, not too important for me as far as what's going to move the needle. But when I see issues with chains like Stellar, falling apart on any given day for some issue, that's worth reading about. And it looks like they had a major issue with the chain not working, essentially, by the sounds of it. And they asked validators to change one of the updates. So they go through all the issues and solutions that they had here. Always interesting to see something like that. And Bitcoin's not immune to that stuff, or wasn't early on. But it's important to see this and realize, okay, it's super early for stuff like this. So just be careful. That's all I'm saying. I wanted to show some stats from PokeStats, but it looks like that site is either no longer functioning or actually in maintenance. I'm not really sure. So we'll have to settle for some other websites. This is stakingrewards.com, and it looks like 64% of the network is being staked. And if you're not staking on any staking network, you're diluting yourself because everyone else is getting a reward and you're not. So it's always better to be staking if you plan on holding something like this. It looks like the reward after inflation is around 4%, unless you're a validator, and it's slightly better. And as the DeFi stuff cools off on ETH, this masternode or delegation type proof of stake may become more attractive to people, where you can get better rewards APY wise versus less than 4% on a lot of this DeFi stuff at the moment. The question is whether or not the ETH interoperability is enough of a silo to just keep people in that system versus transitioning over to something like Polkadot or any other chain that is just sort of separate from the Ethereum ecosystem. If we look at transaction counts for DOT on Coinmetrics, looks like there was a massive, I don't know if this was a stress test or what, anomaly, artifact, I don't know what that is, but transactions are basically around 100,000 on any given day and have sort of cruised at around 100,000 since January. And unfortunately, this spike's going to ruin this chart for eternity, but it is what it is. And we have average transaction values, which basically rose with price, which is what you see. Nothing too specific to comment on there, but you can see this dip in average transaction values. So this could have been some sort of spam attack as well, because basically it brought the average of all the transaction costs way down for that specific day. So again, I don't really know what happened there, but a bit weird. If we look at NVT, inverse metric of economic utility, it's actually kind of flat and rising slightly. So even with proof of stake, it says the network is probably a little too overbought relative to the on-chain activity. Leading into January, we saw a significant rise in on-chain activity relative to market cap, and that's since cooled off. Active addresses are certainly rising, but you expect to see this in any proof of stake network, as 60 to 70 to 80% of the network is staking at any given time. Those addresses are all going to show up on this sort of metric. Nevertheless, it's always better to see this up and to the right versus stagnating or flat or declining. It's just hard to say how much of this is peer-to-peer organic economic activity versus just general run-of-the-mill staking type stuff. If we look at Google Trends for Polkadot price, something that I could search that wasn't like a real word necessarily that would pick up Polkadot related things. The Google Trends spiked to basically all-time highs with price and have since halved or more, kind of as expected. And if everything enters a bear market, you can expect the Google Trends to zero out again. And when they start to peak up, that's when the bear market is typically over. And that may change with the Google trend you're looking at, but in general, this looks very much like the price chart, which is down 50% from highs here. And they benefited significantly from releasing their token or network sort of late 2020, late enough that people could buy it and get on board and exchanges could release it for trading. Before January happened, obviously nobody knew that was going to happen, but because DOT was just available and high in market cap, it was part of that conversation. I had people never touched crypto before asking me about Polkadot at this point in time. So they benefited from that significantly. Ultimately, this looks like a chart that's going right back down to sub 5, sub 10 definitely, based on the sort of rise and plateau in price. Something else to mention is when you see NVT like we did, this isn't even something that I necessarily picked up on, but when you see NVT in December 2020 drop significantly like this, and you see technical evidence for a bottom sort of bullish reversal, trend metrics on its side, it makes complete sense that this moved with fundamental and technical analysis aligning there. It had this cup and handle thing, this inverted head and shoulders thing. Obviously, it mooned from there along with everything else, but that's why I look at the stuff I look at. To see this head and shoulders with NVT rising is also problematic if you are bullish here, because it does not look like on-chain activity is keeping up with market cap even at this level. So there's a decent volume chunk at 16.5, and I'd be waiting for any bullish divergences, just like any other chart in crypto right now, on RSI or volume if we get any lower lows. But it to me looks like 9 or 10, even 8.5, 7.5 is where price wants to live. And it's not going to move there by itself. If it does, everything else is going to sell off 50% or more again, right? Like this isn't an anomaly here. It looks as bad as everything else, right? And there's a bearish 12-hour 5200 cross there. The cloud is also saying it's bearish. Below the cloud, you can see all of January, February, March, was above. It briefly tried to return about in May and then just failed along with everything else, right? Generally in a bear move or bear markets, everything collapses together with alts outperforming BTC just like they do in a bull market. You know, they will get exuberant and wild in a bull market relative to BTC, and they will get zeroed out rather quickly relative to BTC on the downside. So there's nothing bearish about where price sits on the USD pair right now. For .BTC, it looks more of neutral consolidation in this area. This could be some ultra high time frame diamond top thing with accumulation at the current level, but it's hard to get bullish .BTC with a .USD chart that looks like this over the long term. I mean, this is true pain, which is what you expect. This pre-2021 slow bleed march downward, just like you saw on the .ETH pair. This is what's coming for most everything. Just a slow bleed, like low volatility, unexciting, nobody cares, volume is zero, that sort of thing. That's what's probably coming for most of this stuff. So in that case, for .BTC at like 30k sats, 38, 37 is a monthly support. But, you know, you'll know. If everything else drops 50%, this pair will not be spared. Neither will the .ETH pair, which has been hammered since April, really. Below the cloud, below the 200 in April, and then that was it. Good night to the core. And it's trying to build some sort of bullish divergence here with RSI establishing higher lows, volume just going to zero. But it's hard to think that DOT's going to hold its price, even if ETH hits 600. You know, even if ETH goes to sub 1,000, DOT is probably headed sub 10, sub 7. You know, I wouldn't want to touch it honestly until it's probably sub 5, because there's very little price history up here, and that's really the big issue. So for .ETH, you know, I like all-time lows. I don't like any sort of bullish reversal here, despite a potential mean reversion. Kind of looks like the DXY, where it's got this 3 drives lower at risk of breaking support to the downside. So overall, I think it's early for DOT, both fundamentally and on technicals. We'll see where it sits in a year, but really just not for me at this point in time. Lastly, I'll just mention the ETH-BTC fund. I trade on Enzyme.finance for Techemy Capital, non-custodial portfolio management tool. You can send ETH or USDC, or just watch what I'm doing. Everything's done through DEXs, through the smart contract here. You can see allocation, performance, AUM, depositors, everything. It's all transparent. We also have the DeFi portfolio, which has taken a beating this year. Most of this is based on fundamentals rather than technicals, and this one is extremely volatile, just like I mentioned with the .BTC pair. Alts will get crushed relative to BTC in a bear market, and they will also outperform BTC in a bull market. So that's something to keep in mind. And I do have the ability to short some of this stuff, which I think it's slightly too early to start doing that. But it's getting to the point for this portfolio where I will have to cut most of these or all of these positions, just in a form of capital preservation. We also have a stipulation in the fact sheet somewhere here where we don't plan on holding anything past the 50% drawdown. So highly volatile. Be careful if you're participating in that one, just to keep in mind. Probably worth a watch for the time being, because DeFi looks ready for another tumble potentially. So that's all for this one. Like, comment, share, subscribe. Happy trading.